Hello, everyone. Welcome back to our M Plus Swiss highlights on the weekly. And today it's still me, Louis Lam, that will be sharing with you on the market highlights. And if you can see my screen, please put in a Y button, a Y character into the comment section. And please also like this video and also share this video out to your friends. Make sure you have a share badge. And later on, around 12:50, I will be reviewing your stocks. If you have any stocks that you want to review, just put inside. Then I will take it from there, from that point. Currently in the market, I think if you are able to see my screen, we are having downside today. Last Friday, it was a bit positive due to this rebalancing activities effectively on the closing of the 17th. So that's why you can see a lot of KLCI members was up during that part of the day. And Banks was up, Inari was down, Glove was up. And today there is also a follow-through interest on Glove segment. And it has hit some resistance point and it has pulled back again after that rebalancing activities. But if you take note of these rebalancing activities, I think it is very interesting to see that people are moving back into gloves during the rebalancing activities, which means that why do they want to go into why do they want to rebalance the weightage inside their funds? It is because healthcare or the whole glove segment has been down quite significantly throughout the year 2021, and if it is too cheap, they need to rebalance, or if the weightage is too low, they have to rebalance in a way that it is somehow reflecting in terms of their market cap and also in terms of their weightage that they want to put in. So it gives us the idea that they are putting more emphasis on gloves because they are more undervalued than before due to the decline of more than 70-80% of the from the peak for the market cap of glove counters. So that's why after all this taken into consideration, they need to put glove weightage higher in a sense. So if that is the case, then which means that people have stock up more gloves compared to previous before the rebalancing activities, and that is where more shareholdings is in most of the funds right now. And moving forward, we can see that we are likely to see that the gloves are already bottom up. And if you take note on glove counters, most of them are back to near to pre-pandemic level. And if you understand the idea behind, they have gone through a very tough period of this COVID, and after COVID, their share price has plunged, and they are back to pre-pandemic level, but their balance sheet is much stronger, which means that they have more cash and things like that. So if you view it on a fundamental point of view, they are better in terms of the balance sheet. They have more cash, but their share price is back to pre-pandemic level. So if you want to buy a company that is getting stronger throughout this period, and their share price are much cheaper compared to during COVID, I think gloves fits into that criteria. So if you can understand that kind of fundamental point of view, I believe that gloves will be much interested for you. Okay. So overall, we can see that market is down near to 7 points. Volume and value is still quite low throughout this festive season. But also we are understanding that there is also a window dressing period going on, and very likely throughout this next 10 days of business of this calendar day, then we will end the year 2021. So normally during the year-end season, KLCI should generally trend higher, and based on the average percentage that the the average return of on the KLCI during the month of December is around 1.8% out of the 20 years. And the success rate of being in the positive region for KLCI is 17 out of 20 times, so near to 80-85%. Okay, so just to give you some stats, I think there is some potential rebound coming in for KLCI. Then we talk about market breadth. It's very much on the negative side. Down decliners are 558 counters. In the gainers are only 224. So it's more than double the gainers. So overall, market breadth is quite negative. I think this is due to the situation whereby Wall Street is down, and that has impacted in global markets. And global markets is also quite worrying because of the Federal Reserve tone, and Bank of England has increased interest rate. Federal Reserve are getting more hawkish in the tone, and therefore they are afraid of more interest rate hikes. And if interest rate hike is higher, and it's more frequency in 2022, then that would dampen the stock market. So, I mean, everything is into a worrying tone after a long stretch of uptrend. So there might be some correction phase coming in next year. So if Omicron is going to worsen further, then that could also give a shock towards the market, because if Omicron worsen, then that means there could be lockdowns happening going forward. But so far, as a whole, as a lot of scientists has mentioned, Omicron might not be as severe as compared to the previous variant, but we still have to take note that these will also contribute to a concerning market tone, and they are afraid of lockdowns, they are afraid of inflation. So a lot of central bankers are actually putting effort to reopen as quickly as possible into reducing the inflation, because right now it's the supply disruption that is causing this situation, the supply chain disruption that's causing this situation of inflation. So if you can open up as quickly as possible, then that would give a very good advantage, to reduce the inflation going forward. Okay, so the rest of the pack of the sectoral wise, we can see that plantation is the most severe one. I think CPO price has been down, and therefore that is the reason plantation stocks are down. But bear in mind, if you are taking a view that in February reporting season, if the earnings season just before the earnings season, if the CPO price can maintain above the 4,000 to 4,500 level, I think February reporting season will be a strong quarter for plantation. And what you can do is, on the plantation side, you buy ahead of the announcement being made on the results, then sell after the results. That would be the perfect situation for plantation. So because you already know that the plantation sector will turn out to be well in terms of their earnings, and you buy ahead of their results, then sell after the results. That is just a way to operate plantation counters. And bear in mind, there are also a lot of dividends to be paid out throughout this period of time, because this is definitely a windfall season for CPO price, windfall season for the earnings as well. And I think if the 4,000 able to maintain over the next couple of quarters, the amount that they are willing to pay out is even higher. Okay, so plantation counters are likely to be played or operated in a way that buy ahead of the results, then sell after the results. That is just one of the methods to operate. Okay, other than that, industrial products are down quite badly, near to 0.85. Property is down 0.87. I think there are still quite a long way for them to recover for property and industrial products. I think mainly I think this could be because of Tomipac also down quite severely due to the factory being burned down and things like that. And VS, PIE, all these are related to EMS players. EMS players are always being targeted recently, and that is why industrial products are down for this section. But if you look at the Chin Hin, EMS, Malaysian Cement, these are building material segments. So there is some potential looking at this kind of movements here. Okay, so this is just a market review of what is happening today, and down because of the Wall Street is down, and volume value wise is not as exciting due to festive season and also after the budget. As I mentioned a lot of times, after the budget, 7-digit changes has impacted the trading activities in the stock market, and the Cukai Makmur, the prosperity tax, is also one of the reasons that people are not really attracted to trade in Bursa for the time being. Okay, so maybe we can go into details of what is our topics today, because I think there isn't a lot of interesting picks, because most of the time the companies are down, and there are only a handful of companies that we can handpick for you. So I will share another screen here. It is the chart that we have put in our effort to look into strategies, and daily picks is what we have put in for the day, and we can actually look into all these counters as one of the trading stocks, trading stocks for the session. And why do we pick, we just go down to the idea of why do we pick all these counters before we go into the charts. Okay, so CIMB is because last Friday I know that it is being rebalanced, and therefore it is higher. So at the same time, banking stocks is also great during the COVID-19 year, and despite all this moratorium, we still like the position as a strong banking stocks in Malaysia, and therefore we believe that there could be some potential breakouts. But today it hasn't give us any signals yet. So we shall monitor on the resistance side, which is around 531. So 531, 532. If there's a breakout, then perhaps we can look into 540 level for the next target. Overall, it is an very interesting position that we are able to see further outside. We are able to see further outside. You can look into this as an uptrend position. Continues to retest without breaking below this level. Unless share price has fallen below this level, then we have to take note that this should be into a correction phase. But for now, it is very interesting that it is able to cross above the 5 mark. It is able to cross above the during this period is the COVID-19 era that they have pulled back towards the lowest point near towards the 285, and it went up higher from the point. So it's even higher, one-fold, near to one-fold of this from this recent or the trough area in October 2020. So in this kind of environment, if banking stocks are still considered as good, decent companies to be invested, is due to their strong and steady earnings that they can come up during this COVID-19 period, and dividends wise are still not as bad. So overall, I still see some people accumulating all this, and especially during this window dressing period, that is where people wants to continue to anticipate things to happen within the banking stock. So CIMB is one of the pick because window dressing period, steady earnings, strong dividends, and I think it's still able to capture attention of traders. Okay, EFOS. Why do we pick EFOS? Is first of all, the chart pattern looks quite decent. Secondly, is related to MYEG, and we know that Sarawak is dominated by GPS earlier on. So during the Sarawak election, that could give us a sign that potentially some of the parties might emerge as the winner down the road for the next general election. So if that is the case, then we have to position something within this space of political link companies. So EFOS seems like a good pick due to the they are part of their common shareholders is TS Wong with MYEG. So we thought that might trigger some breakout in near term or maybe in the mid-term. So 61 cents is the resistance for over the past 3-4 days. Then support is near towards 58.5. We are supposed to look at a breakout. Then field resistance will be around 63.5, 65, and also 66.5. So that is the idea for EPOS. Other than that, there isn't a lot of things to take note of, but we're just basing on a few catalysts out there for EPOS, a common shareholder of MYEG. We thought there might be a chance of BN related to potentially win in the next general election of in another 1.52 years period. Then so that's why we believe that that there might be some trading interest today, but it hasn't really triggered us anything yet unless there is a breakout above the 61 cents. So let's monitor down the road. At least maybe you can give maybe 2 to 3 trading days for that to happen. Okay. So for Harta Lega, I think it's one of the best companies in under the glove segment, and they have been since the Omicron has came in since the end of November. It has traded negatively since then after 2-3 trading days, and recently it has regained traction. So we thought that it can trade higher. So this morning it traded from 532 towards the highest point is 560. That is about 28 cents, 28 ticks of trading opportunities. So I think there is some good movements there. So Harta Lega is one of the best top 4 companies, glove companies. So just give it a try. I think it's still not too bad to engage in within the glove counters. Bear in mind, a lot of companies like Comfort Care Plus has been down due to the results, and also due to the results, it's not as great, but it is still around 93 1 ringgit level. It is still quite high. I would say that quite high relatively to pandemic level. Pre-pandemic level is around 23, 24, 20, 30 cents level for Care Plus. Right now, I think there might be some room to fall for those companies that are still quite high as compared to the pre-pandemic level. So you can see that even Comfort is having some declining movements for their financial results. It is still quite interesting that they are still not dropping that much, because I think they have absorbed most of the drop since August last year until this November. And if you look into January-March period during 2020, it is around 80 cents. So right now it's around 120. So it's still quite far-ish, okay, for them to potentially drop. But if you look into Harta, what is happening here is, if you look into January to March prices, it is along. You can see that January to when the breakout happens, it's around lowest point is 490. Yeah, 490. Then in March, the real breakout and the lockdown has been seen is along this March, and it has just traded towards 590. So 490 to 590 is the range that for the pre-pandemic level. So this is one of the good company under the top 4 glove players. And recently it has traded towards 490, which is near towards the pre-pandemic level, and it has traded to as high as 690. So this range seems like a very decent range, because as I mentioned earlier on, glove companies has gone through a wild swing from the lowest point of pre-pandemic level to highest point and back towards the pre-pandemic level right now. But the balance sheet of cash flow or cash position they have right now is much stronger, a lot more stronger compared to pre-pandemic level. So I use that as a fundamental gauge. If they are stronger but back at the same level, you should be seeing that as a strong sign of companies under glove companies that is able to withstand, I think, at least another crisis or another 10 years to go. So Big Four, they're strong, they're getting stronger, but their share price is back to previous level. So it means that there is no, I would say that there is no downside if you are using this as a relevant, relative speaking manner. Okay, So back to pre-pandemic level in share price, much stronger balance sheet. So it's a positive sign. Okay, another one, Eureka is part and parcel of strong counter because of the prices has actually maintained above 65, 70 cents level, and it is trying to retest the previous high, and it has been continuing its formation here without selling off below the 60 cents level. So that is a very good sign that we can expect this to be a continuation run. Just that today it hasn't give us a signal yet, so we shall monitor and maintain view that it is uptrend, and we are going to monitor the 81 cents, 90 cents, and also near towards 97 and 1 ringgit zone as the mid-term to long-term target for Eureka. So Eureka is under the construction sector, recently has gotten some contracts, and that is a good sign that we should be maintaining a positive view, at least for now, at least for the near term. So cut-off point is around 71.5. Okay. So KUB is due to again political link, and rebound formation has been seen last Friday. It can be seen as also higher high, higher low formations. So this is just one of the better charts to look at, and government link or political link, and that's why we have put in today's into our today's daily peak. And lowest point was around 62.5. I believe that once it opened, it has triggered us the momentum buy signal, and resistance was around the 64.5 cents, 64 cents level at this moment. So it has triggered us a very good opportunity this morning. It has hit resistance right now, so perhaps the 346 will be the range to look for under this kind of scenario, this kind of sentiment. But once it is able to break out above this 64 cents, I'm expecting further upside to be seen towards 69.5, which is quite likely because as long as it is hovering just around the 62, 64 cents level, I see a good opportunity towards 69.5 in near term. Another one is RG Tech. It has turned into a sideways or flat formation breakout. I think that is a very good opportunity to look at it, as we understand overall chart pattern has been quite encouraging. There are also the part of the shareholders is also linked to Speedmart 99 Boss, and this is also under the consumer sector POS system. So he might be able to see some of the potential under this company on the recovery tone, or even point of sale might increase when the economic recovers in tandem. So that's why it has rallied since 38, 39, 40 cents. Breakout pullback towards this level, a continuation pattern. Flat formation has been seen last Friday, and today itself it didn't really trigger us anything yet, so we have to monitor. And next target will be around 51 cents level. So Algitech seems quite interesting, and we have to just monitor for the breakout again. But so far, if there is no falling below the 43 cents, I will still take it as a potential entry, and next target will be around these two levels here. So SCOMNET is another healthcare company related to medical devices. We see that the trend has been quite sustainable, and if you look at the long-term perspective, this is definitely channel breakout. Breakout happened here, it turns sideways, and the next move starting right now. If you use the previous rally here, or even the range of this channel here, to project it upwards, okay, let's see what is the range that we can expect, which is around maybe 240, 250 level for SCOMNET. But if you're looking to mid to long-term position, this might be the range that we could be anticipating. Long-term wise, I see that trimming at 30 cents might be a long-term target for SCOMNET. Bear in mind, they are also related to US companies, and one of the US companies they are providing. So that's why it should be interesting to take note on SCOMNET, because of in a very, very decent sector, medical devices. After these COVID activities, certainly many people will look into hospital as a next growing trend because they would solidify their sector. So they need more equipment, and that should provide them a good demand catalyst going forward. Okay. Tasco still haven't break out yet, so we are waiting for that to happen. Swift College is going to having an IPO listing soon, and that may trigger some good, interesting moves within the transport and logistics companies. Given that the scenario is all the freight charges are higher, demand is higher during this COVID period due to this supply chain disruption, that should benefit them at least another 1 to 2 quarters on their earnings. And that is where we can see in February and also May next year. But overall, I still expect the core of the economy, which is the transport and logistics companies, to benefit out of all these supply chain disruption issues. And the recovery tool will also help them on the demand. So both sides, both of the catalysts are, working out for the time being. So that is how we are looking into this overall situation in terms of this the economic recovering activities and also the supply chain disruption issues will benefit the T&L, transportation and logistics companies. So these are the ideas for today. If you have any, if you don't have any ideas and don't feel like trading the daily picks, you can always go into Traders List. This is one of the place that you can actually look out for interesting ideas, because these are the companies that we put in over the past 5 to 7 trading days, and it is still within our list because we believe that the signal might not trigger today, but down the road within the next 7 days, there is a very good chance that it can break out and give us a good opportunity. So for instance, we have put in Supermax last week as well. I think it traded higher from 145 towards 152, which is giving you a very good trading momentum, at least for the first half an hour of the period. B Pharma and Atronic is also one interesting ideas. 5 hit towards 5.59 cents. HH Group last week itself get up and still maintain the view. ETMB, okay, still uptrend. EcoWorld has slightly breakout, but it's not strong. AYS is one of the counters that we have put in much earlier, around 60 cents. Right now it's near to its highest point, 66.5. Okay, so I see some questions related to our picks last week. Is Senco. Senco is, yeah, it's quite decent, I would say. So if you look at the chart pattern here, it is a higher high and high low formation, so it's considered an uptrend position. Casey Low has asked this question. So if you are holding this company, I think it's worthwhile to look at the near-term movements, which is, I believe that there is still more upside to be seen because we have put in last week, and this is certainly interesting for us to take note that it might continue to trade higher because of uptrend movement. And secondly is the downside risk is around 63 cents. So uptrend cycle is coming in, potentially coming in, and therefore we are expecting a strong breakout to happen with this ascending triangle movements. So next target potentially is towards 84.85 cents level. Okay, I mean that should be a mid to long-term target. Short-term wise is has started to be positive, so you just have to wait. Another question from Casey Lau is also Edaran. So let's check the chart pattern. Edaran is on the pullback side. It's slightly lower. It's slightly negative for now, but you can anticipate a technical rebound to kick in towards 81 cents. Overall, I don't see it as a strong counter yet unless it can trigger trading activities above the 81 cents. So for the time being, it is definitely a rebounding mode, and just an upside is limited to around 81 cents. Unless it can search above that level, then perhaps 88 cents is the next target. So overall, I think 81 cents towards 88 cents is the resistance. Support is at 74 cents. So Miss Joanne Teo also asked a question about Chin Hin. I think this morning there is news on this counter. Perhaps that is why it has rebounded today. And if you take note of this counter, it has rallied quite significantly since 192 towards 233, pulled back a few days, then it rebounded off 218, 219 level. Next target or next resistance is around 233. Overall, it's still an uptrend in that position counter. And we shall maintain the view that it's positive and it should continue to rally. Okay. Chin Hin is likely to tag along with all this solar related because one of the subsidiaries, SolarVest, is into solar panels related construction. But that is just a theme, but it's not as strong. It's because the SolarVest is or solar related companies might incur more solar panel higher solar panel costs. So that's why it's not as decent for the time being. But once this material cost subsided, then it may benefit them down the road. So overall, I see Chin Hin might benefit under the theme, and also Chin Hin has two segments as well. One is construction, and the other subsidiary CHGP property is also under them. So building material construction should be benefiting for the recovery next year. Just that when the recovery will happen, we are still unsure yet because construction sector is more or less need some catalyst, which election is one of the catalysts that we expect. When it is nearer to the election, then there might be some trading activities coming in. But if it is not having that kind of news catalyst, then just the recovery play, it's a bit softer than expected. Okay. So another question from Ray, Inari. Okay, Inari last Friday down quite a bit. This is due to the rebalancing activities. But overall, actually, it's pulling back. It's pulling back. It is not as decent as if it is able to stand above this 392. It is still struggling to perform, at this range of 366 towards the 380 level. So we have to really monitor down the road around this level here to see whether there's any movements upwards, upwards to at least to retest first of all the 392 level, or even the highest point of this red color, the black color bar, which is highest point is 397. If it is able to retest and break out above that level, then it's good. But if not, then we might be anticipating the movements to be limited, to around 392 and 397. For the time being, it is still in the correction phase. I would not draw any conclusion right now for the uptrend cycle because it's definitely in the correction phase, and let's see. But definitely, it's a good cheering point where this is the first company to add into the KLCI index. So that should lift most of the technology stocks going forward. Right now, let's see the near-term view, which is negative, and see how can it sustain around this level here for the time being. Okay, another few more questions. WCT. Oh no, there is another question. Meridian. Meridian is related to the economic recovery activities, which is tourism. It has fallen quite a bit, since 18 cents back towards 8 cents. It is definitely under the tourism sector, but it's not really catching attention yet. We just have to monitor that, this might have a chance when it recovers. It should maintain, around this level 8.5 towards 10 cents level. Next target will be around the 14 cents level. This is just a trading range of a technical rebound move. It doesn't give us any opportunity in terms of the long-term bullish tone yet because it is still on a downtrend manner. So it needs to clear off the 14 cents. So right now, it's just a technical rebound. If there is anything, it will be a technical rebound only. Yeah. Okay, WCT, next question by Ganesh Gan. Um, Still downtrend. Can't see any strong movements yet unless you want to pinpoint towards buying at the lowest point will be around maybe 50 cents or even 46 cents. I would see that, you know, right now downtrend is still quite strong. DMI or average directional index is still negative. So they might, you know, break below the 50 cents towards 46 cents before recovering. But overall, I still anticipate the downtrend move is still not ended yet. And we need to see a good clear cut break above this level here um, before uh, making a good progress towards an uptrend move. So I think it needs to, you know, fall back towards around this 46 cent, 48 cent zone before breaking out, pull back, and continuation pattern to happen towards 72 cents level. So overall, I don't see that happening for now. WCT might continue to consolidate. Okay. Next is Aegea. Asked by, yeah, there is no name on this, but it's okay. We can still give you the technical reading. Aegea is definitely into a good upward trending mode, just that it is currently into a sideways consolidation phase. We are looking into 80.5 cents as the support range. Resistance is along the 87, so it needs to cross above this level before making a very good strong move, at least to cover the gap around the 91.5. So anticipation of these to go up right now is much lesser compared to much earlier on because of this black candle here. The black candle here has given us a signal that it is telling us that selling pressure is strong, and it needs to take a longer time before this move can actually surpass this previous resistance zone strongly, and therefore right now it is uptrend into a correction phase. So the correction phase needs to digest all this previous selling pressure before it can go higher. So if there is any point in time that it can cross above this 87 cents, the resistance is still quite, the upside is target is still quite limited towards 91.5. Okay, that is just my view on Aegea. So uptrend is still there, just that because of the selling pressure in this black color bar, it gives us the idea that it is likely to consolidate further before the strong recovery position. Okay, so last counter before we end this session is Litra by Kenny Yap. I think Litra is very interesting that they are under they're having you know, all these highways in under their portfolio, and recovery team comes in, this would definitely benefit. So Litra has been always just moving sideways without any significant movement, but their dividends are quite attractive. So that's why you can see all this round they have been paying 10 cent, 10 cent March, September. This is also March, September. So 20 cents, yeah, 20 cents they are giving since last year. I think earlier on also similar. No, earlier on is around 15 plus 10 is 25. And this one is 10 plus 15 is also 25. So 25 cents, if they can recover back towards that level and give you 25 cents dividend, is near towards 6%, 7% dividend. So overall, I see that as a good catalyst to hold on to Litra if you are having a view that recovery team should come in, or more people are using the highways, and definitely they are able to pay out dividends at least 25 cents. So last year they are only paying out 20 cents. So if they can pay 25 cents down the road, even at 5 ringgit, it is still 5% dividend yield. Okay, so that is just what I want to pinpoint to you. And 3.70 cents is the current price right now. If we are looking at pre-pandemic level, it's near towards 4 ringgit, and 4 ringgit and 30 cents, 4 ringgit and 40 cents. So the upside potential from 3 ringgit and 70 cents is still quite significantly higher. And if they are able to pay out 20 cents, 25 cents, even at 5 ringgit, is still a 5% dividend yield. So you can get a capital appreciation of 19%, and also towards perhaps the 35, 36% if people are willing to trade at 5 ringgit and you are still getting 25 cents dividend. So this is some of the uh, stats that you are worth looking at later on. Okay. So I guess that will come to at the end. So in summary, in conclusion on today's trend is negative, and we are likely to see softer trading during the festive season. Right now, especially ongoing festive season throughout this period of time, and a lot of people can't really travel throughout the first 11 months of this year due to MCO. People are refraining to dine in, dine out. Okay. Um, Dine out from their home, and right now is the time. So people are having a lot of vacation, and therefore trading activities as much lower. And looking at the KLCI, likely to have the window dressing to come in at least for the rebound, move above the 1500 towards the 1530 level for FPM KLCI. So that is just a view right now. So I guess we will see you again next week. So for now, trade cautiously in the stock market. Just try to make sure that your plan works out. You have to maintain your cut loss position. You need to take profit much faster than expected, because under this scenario, normally it will trade. The range of trading might be narrower. Okay. So yep. So that's about it for today. Thank you so much for tuning in into our Wiz Pro highlights for the weekly, and we'll see you next week. And bye bye.